Hi, I'm Alistair McCaig. I'm a market analyst here at IG. I think when clients look to trade the Nikkei, it's worth considering some of the aspects that are going on in the background at this point in time. Obviously, it's slightly more unsocial hours for most of us. However, it might be useful for others. I think we really do need to look a little bit more broadly than just the fact that this is the leading indice for Japan, and look at Japan itself. Although IG clients obviously can trade this indice and the bet will be in sterling, it is worth noting that obviously it's a Japanese company and therefore index, and therefore Japanese yen strength will play an important part in how this index performs. And we only need to look back to the tail end of 2012 when the new Japanese Prime Minister was elected, very much on a policy of weakening the Japanese yen. That in itself is in a desperate effort to try and stimulate the Japanese economy and help them move out of what has been effectively 20 plus years of stagnation. One of the aspects that this means, of course, is that many traders have looked at Japanese yen over the last 6 months and going forwards as well, as the Japanese Prime Minister continues his emphasis on weakening of the Japanese yen. And effectively, many Japanese companies will undoubtedly have been looking to see what they can do with their cash, and they will be looking overseas to do that. And to a certain extent, there won't be reinvestment inwardly, there will be investment outwardly, so that they can derive an income based either in, say, US dollars, euros, sterlings, quite frankly, anything other than Japanese yen. So I think that there will be an ongoing pressure to the Nikkei and to Japanese equities, whereby so many in Japan, savers, investors and companies themselves will be looking to export their savings, their power base as it were, to overseas economies and more specifically overseas currencies. So I think it is one of the aspects to bear in mind. A shift in the Japanese policy towards their currency could well see a shift as far as the equities are concerned too. We touched on the fact that historically the US markets have really been the powerhouse as far as global economies have been concerned. However, we have seen a shift in the last decade to, quite frankly, the economic data coming out of America still being the most important, but very closely being followed by that of the economic data coming out of China. And I guess those traders that look to trade the Nikkei have the most accessibility to the quickly moving market conditions that any economic data releases from China might have. And certainly trading involved directly either Chinese equities or indices is problematic at best. Having said that, trading on the Nikkei does give the underlying trader the ability to trade in an environment with the same certain time hours and a more direct exposure to that market.